Welcome to ChartsView presentation. This presentation I'm going to show you how to trade the 1 hour trading technique. Basically it's based on the first hour of trading and you use a 5-minute chart for this. So this is actually a day trading technique. It's quite effective, but you have to be very strict with discipline. You can't break the rules as such. The rules are the first hour of trading. You look. I'll give you an example. Here's a chart of it's on the FTSE 100. This from here to here, it's basically a whole day's worth of candles. And this is based on a 5-minute chart, basically. So the way it works is in the first hour of trade, you look at the highest point on the first hour. In this case, it's 5854, which was that 5 past 8. Then you look for the lowest point in that hour as well. In which case, this one is 5831. That was the lowest point. That's a dip from that point here to this point here. The difference is 23 points. Now, basically, what that means now is if the price breaks below after 9 o'clock, if the price breaks below the lowest point during that first hour, you go short. In this case, it happened at 10 past 9, broke downwards. Now once it breaks downwards, you place your short and your target is 23 points. That's the distance from the top here to the bottom of the range. That's all you're after, 23 points on this particular day. You're not after anything more than that. 23 points and you're out of the trade. On this day, as you can see, it dropped, kept on going down. At this point here, sometime it hit your target of 5808. That would have been your target trade. So you'll be out on this candle here. You'd have got your 23 points banked and gone. And this was by 9:30. So you've got your trade for the day. That's it. You're done. You don't keep trading any more shorts. You're done for the day. Only time now a new trade will happen is if it goes above the high of the first hour, which will be up here. So for the rest of the day, you're watching it, do nothing whatsoever. You're watching it, and it finished right slightly down. So on this day, you would have made 23 points gain. That is a successful trade. Simple technique, as you can see, using the first hour trading. You take the high, you take the low, and then after the first hour, after 9 o'clock, you then look to trade in the direction of the breakout, which in this case was down. Now, I'll show you more examples here. This is of the FTSE, obviously. I'll show you some more examples. Here's another example here. Let's zoom in on this one. From here to here, it's a whole day's worth of trading. That was the highest point during the first hour. That was the lowest point during the first hour. So once you know the lows, once it's bounced off it, then you wait for your signal. For the rest of the day, you're waiting for the signal. And on this day, the signal come right at the end of the day here. It broke out and it went down. Your target would have been 42 points. But the way it worked out, come 4:30, you would have closed the trade. Whatever happens at 4:30, you would have closed it. You would have gained 11 points on this occasion, because you've closed the trade at the end of the day. You don't let the trade ride out to the next day. You close it and walk away. So you would have gained 11 points based on this. Let's go back to the previous day of that one. Previous day was here. Again, you take the highest point and the lowest point on the day. The highest point in the first hour was at 8:15. It went up to here. The lowest point was around about 8:40. Then you're waiting for the signal to go either long or short for the rest of the day, and the signal come at 10 o'clock. It broke out, got you in the trade, and your stop is below this point here. The stop is always at the distance of the range. For the rest of the day, you're still in the trade, you're still in the trade, and finally decides to break out, come back and test it, and it broke out, and it finished the day on a high. So you would have got your this range here is 17 points. You got your 17 points trade on this day as well. You win. So go back this way. Let's see if there's any losing trades. Can't just show you winning trades all the time. That's still a 10-point loss because it's due to the end of the day. So I was trying to show you another losing trade if I got one. Okay, bad example. I'll show you this one losing trade here. Again, first hour, the lowest point is here somewhere, and the highest point is here on the first hour. The highest point was achieved at 8:45. Lowest point was achieved at 8:05. Now the range is 32 points. So at some point during the day, around about 9:50, it broke out. Now your target is 32 points higher. So unfortunately on this trade, the target would have been where I'm currently. Fortunately, it wouldn't have reached there. It would have got close, but we missed it by about a few points. It turned back down and it finished way down on the end of the day. So at the end of the day, you lost 10 points. But if you use good money manager, the minute it broke out, got in your favour after a while, being 32 points away, you would have put your stop loss below here somewhere anyway. So you could have actually come out of this with a profit as well. But that's down to money management and your level of moving your stop losses. Anyway, I'll zoom out. This is from 20th of September to the 10th of October. That's fairly recent. The smiley faces are the ones where actually made money. The ones that were visible face are the days that I've lost money. But looking at this based on just those days, there's been 1, 2, 3, 4, 5, 6, 7, 8, 9 profitable days. One in between where I didn't make no money or lose money, and 3 days of losses. So system does work, but you have to stick to strict rules. You can't trade without having good strict money management. For more ideas like this, visit www.chartsfood.co.uk. End of presentation.